The RSI indicator is one of the most popular indicators. However, one of its biggest problems is that it is known for providing inaccurate signals in trending markets. The RSI indicator assumes that the market is symmetrical, meaning that the price has the same likelihood of moving up or down at any given time. However, this is not always the case, especially in trending markets. We can see an example of this happening here. As you can see, the RSI is repeatedly giving oversold signals, despite the market being in a trending condition, making the likelihood of the price following the downtrend a lot higher. The solution to this issue is the RSI self-adjusting linear regression bands indicator. Let's first add this indicator to the chart. Head over to the Indicator Search tab and search for the RSI with self-adjusting linear regression bands. Select the indicator made by Zierman and add it to the chart. Let's first change the indicator settings. Head over to the Indicator Settings tab and click on the Style tab. We will be changing the opacity of the oversold and overbought zones. That was all that we needed to do. Now let's take a look at how the indicator works. The indicator consists of three main components. The first component is the blue RSI line that shows us the value of the RSI. The second components of the indicator are the upper and lower linear regression lines, also known as the upper and lower curves. You can see that when the RSI line goes outside of these upper or lower linear regression lines, the plot will be filled in with a red or green color. The final component is the regression line, also known as the middle curve. Now that we know how the indicator works, let's take a look at how we can read the indicator. To interpret the RSI with self-adjusting linear regression bands, traders should look at the RSI value and the position of the RSI line in relation to the upper and lower bands. When the RSI line crosses above the upper curve line, it indicates that the market is overbought, suggesting that the market might be due for a bearish reversal when the RSI line crosses back below the upper curve line, signaling to traders to consider selling or shorting. On the other hand, when the RSI line crosses below the lower curve line, it indicates that the market is oversold, suggesting that it is likely that the market will make a bullish reversal when the RSI line crosses back above the lower curve line. This is a signal for traders to consider buying or going long. Here we have added a regular RSI indicator along with the RSI with self-adjusting linear regression bands. If we take a look at both of the indicators and compare the results, we can see a clear difference. As you can see, the RSI indicator with linear regression bands took into account that we were in an uptrend, thus it only gave a signal when the market was oversold while being adjusted. As you can see, after the oversold signal was given, the price indeed made a bearish move. If we take a look at the regular RSI indicator, we can see that multiple false oversold signals were given before the market actually made a move in the bearish direction. Now that we know how the indicator can be read, let's take a look at the methods that can be used to enter into positions. As we mentioned earlier, the most common method of reading the indicator is by looking for crosses below or above the upper or lower curve lines. However, it's important to note that we can also use the self-adjusting linear regression lines to enter positions, which can be equally or even more effective. Most people will use the RSI indicator to spot divergences, which is great for shorter-term signals. As you can see here, the RSI indicator is making lower highs, while the price is making higher highs. This shows us that a short-term bearish reversal is likely. If we take a look at the price action after this signal occurred, we can see that the price indeed made a bearish reversal. Despite this being profitable for short to mid-term signals, we can actually spot longer-term divergences with the self-adjusting linear regression lines. Here we can see that the price is in an uptrend. During this uptrend, we can see that the price is making higher highs. However, if we look at the upper self-adjusting linear regression line, we can see that it's making lower highs. This indicates that a long-term downtrend might start to play out. As you can see, after the signal was given, the market entered into a long-term downtrend. Even though the indicator can already be extremely profitable when used by itself, let's add an extra indicator to the chart to make a complete strategy to use it with. Head over to the Indicator Search tab and search for the Super Bollinger Trend indicator. Select the indicator made by Zierman and add it to the chart. After that, navigate to the Indicator Settings tab and click on the Style tab. Here we will be unchecking the Labels checkbox to make the chart less cluttered. That was all that we needed to do. The indicator works by combining the Bollinger Bands and the Supertrend indicator into one. By merging the Bollinger Bands and Supertrend indicator, this tool provides traders with a comprehensive perspective of the market, encompassing both trend direction and volatility. The main component of the indicator is the modified supertrend line. This line shows us the trend direction along with points at which the trend direction changed. There is also the zigzag line. This component shows us the movement of the price simplified in the form of a line, helping us see the market structure. Now that we know how the indicators work and how we can read them, let's take a look at how we can use them to enter into positions. But before that, I am currently hosting a Bybit trading competition with a prize pool of up to $1,000 where the first place gets $500, and the second place gets $300 and so on. If you are interested in joining and earning, click the link in the description to join. We are currently looking at GBP/USD on the 1-hour time frame. If we take a look at the price action, we can see that we are currently in an uptrend. This is confirmed by the zigzag pattern. We can see that the market structure is bullish. However, we can see here that the price has made a small bearish move. By looking at the previous zigzag high, we can see that the bullish structure hasn't been broken, indicating that there is still a high chance for the bullish trend to continue. If we look at the RSI indicator with self-adjusting linear regression bands, we can also see that the price has crossed above the lower regression line, indicating the market was oversold and is now starting to correct the imbalance, further signaling that a new uptrend may start. Finally, the Super Bollinger Trend indicator also switched from a bearish to a bullish trend, confirming that there is a high chance of the uptrend continuing. Based on all of these signals, it's a good idea to enter into the position. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. Here we can see a different bullish setup. The price was in a large downtrend. After the downtrend, the price started making higher lows, forming a new uptrend. However, we can now see that the price has made a small bearish move. Despite this, we will still enter into the long position. This is because if we take a look at the previous price action, we can see that this price level was previously used as a support zone. Along with this, we can see that the RSI indicator was oversold and is now moving in the bullish direction again. Finally, if we look at the Super Bollinger Trend indicator, we can see that the line switched from red to green, indicating that the price will continue in the upward direction. All of these signals indicate that it's a good idea to enter into a position, so let's enter into the buy position. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. Here we can see that there is a downtrend playing out. During this downtrend, we can see that the price made a small bullish move. However, after checking the zigzag pattern, we can still see that the market structure is bearish. If we look at the RSI indicator with self-adjusting linear regression bands, we can see that the RSI has crossed below the upper regression line, which also indicates a potential start of a new downtrend. Additionally, the Super Bollinger Trend indicator has switched from a bullish to a bearish trend, providing further confirmation of a potential downtrend continuation. With all of these signals aligning, we should enter into a sell position. We will be placing the stop loss at the recent swing high. For the take profit target, we will aim for a 2-to-1 risk to reward ratio. Now let's observe how the trade plays out. I hope you guys could see how the RSI indicator with the self-adjusting linear regression lines can be read, and how it can be combined with other indicators such as the Super Bollinger Trend. If you enjoyed the video, please leave a like and subscribe to the channel.